Yeah, good morning. It's Jim from jagfx.com. It is, what is it? Thursday, the 18th of September, 2025. This video, we're just looking at some of the high probability setups from my trading books on a few pairs, on the Forex pairs, that is. Well, they're not all Forex because one's gold, on the daily charts. So it's a high probability and divergence trading methods from my books. So the first cab off the rank is the AusCAD. So this is Australian dollar, Canadian dollar. There's a new sell signal this morning. As you can see, if I move this red line out the way, there's a red QMP filter dot up there. So I took the sell. The MACD platinum's above the zero level. Remember, we're looking to sell when it's above the zero level and buy when it's below the zero level. So here's my notes on it. 18th of September. It's not a bad sell setup, even though it's against the trend. You look at the three moving averages, they're starting to turn up and spread to the upside. I do like the fact that the price is a long way above the moving averages. Generally, price either goes to the moving averages or the moving averages goes to price. But there are a big difference between price and the moving averages at the moment, and also the MACD platinum's a fair distance above the zero level. Now, for me, I'm in a loss recovery from back here. So that's why it's called it's trade six for me. They sell because they're all previous trades I've lost on. I've got some ground to make up, some money to make. So these two yellow lines are just my targets to recover those losses. So yeah, it's a new sell signal. If you would just take a traditional trader and placing stops, which I don't, your stop would be sort of between the highs here and the red dot. So about in here somewhere, that level there. If you're going to put a stop in place, it's a new sell on the AusCAD. Next one's Aussie Japanese yen. Already in a buy trade from back here, and there's a stop in place there. So the buy's here, and the stop's above it, so I can't lose on that. And that was a trade five and a loss recovery. So I've recovered all the previous losses from trades back here, and now in a position where I've recovered all those losses and also put myself in a no lose position on this buy. But today we get to a sell signal. So today's a sell signal. Um, Here it is here at 97,635. It's a high risk trade. It's trading against an uptrend. You can see the moving averages are spreading to the upside. But I do like the fact that I'm partially hedged with this buy. So I've got a partial hedge. And I know everyone can't do that, especially if you're in the US or something like that, but I can. So that's how I trade. Um, Partially hedged, and price is a fair distance from the moving average. It's not a great distance, but it is a bit. MACD platinum's above the zero level too, so it's not the great setup. Again, if you're going to place a stop, it'd just be below the red dot, somewhere in that level there, 98,846 or something like that. Don't just jam your stop right on the high or something like that. Give it a few pips breathing room. But that's the Aussie yen, so it's a sell trade also. Next cab off the ranks, the pound Aussie. Now, I've taken a buy on this morning. Now, you'll notice that we've traded the AusCAD, Aus Yen, now the pound Oz. So there's a lot of correlation there with the Aussie dollar being involved in all three. So just be careful of overall risk. Very similar to the Aussie Yen, except in reverse. I'm in the sell trade from back here. Um, Already closed half, stop in place. My stop's there, the red dotted line, so I can't lose on that. Taking this buy this morning, I've got this partial hedge on here. MACD platinum's a good distance below the zero level, which I like. Remember taking buys when it's below the zero level. There's my dot there. If you're going to place a stop, you probably put it around there, 202,807. The way I trade is without stops, so I don't have a stop as yet. But if I can, I will eventually get one, as you can see by that. Um, so we've got that partial hedge there. My concern is this previous support level. Now, there's two schools of thought. The more touches there is to a support level, the stronger it gets. Whereas other traders will say the more touches there are, the more chances of breaking through. Who knows? Support can sometimes become resistance. So we've sort of broken down below it, not convincing. Remember, it's not an exact price. It's more of a trading zone. Um, so we're at that sort of same level again at the moment. But I do like the fact I'm hedged, gives me some protection. So we're in a sell, partial sell, and a buy. So it's the pound Aussie. Next one's XAU USD, which is gold. Now, again, I'm in a buy trade here. Oh, there goes my phone. In a buy trade from here, which is a loss recovery. That was 2 trades, recovered my loss. Stop's been dragged up, so I can't lose on that. So that's good. In the meantime, today, took this new sell. The trend is up. Look at the moving averages. This is gold, so it tends to have a more bullish bias most of the time, not always. So that's the 50 EMA, 100 EMA, and 240 LMA, or linear weighted moving average. They're all going up. They're spread, so it's a high risk trade against the trend. I like the fact that price is a long way from the moving averages, which is good. Also, I like the fact that I'm hedged, which I've been saying for a few. The MACD platinum's a long way above the zero level, so I'm quite happy to take this sell trade. This green level here is a 3,500 level, which is a big round number. So, at the moment, this could probably move up right up here somewhere, and I'd still be overall profitable between the 2 trades. So it gives me some protection having that buy trade. I haven't got a stop in place. I'll probably put it around that level there. So any 3,730, something like that, around that level there. And I also moved that buy stop up today. So there was a little bit of trade management there. That stop was moved up. I just tend to keep my stop close to the 50 EMA. So it just gives me locks in a little bit more profit and brings it up a little bit. All right, that's it, boys and girls, for today on the daily charts using the high probability and divergence trading methods. Thanks for watching. Enjoy your day, and I'll speak to you good folk another day. See ya.